Corporate accounting. Unit number 1. Issue of shares. Shares two types, equity share and preference share. What is meant by shares? Shares may be defined a part of the equal part into the capital of company is divided entirely holder of the shares proportion of the shares. Share premium, the amount which company gets after issue shares investor and that over and above the face value of the shares in capital. Share premium. Share discount, when a company issue its shares at a price lower than face value, it is share discount. Call scenario, when one or more shareholders fails to allotment application calls, that is called calls in arrear. Calls in advance, when a company accepts money towards from the shareholders in advance towards calls not yet to be paid. The company, such amount is termed as calls in advance. Forfeiture of shares. Forfeiture of shares, termination of shareholders. If you fail calls, allotment application money. Reissue of shares. After the shares they forfeited, the company can be reissue of shares. Stock means the share of company in a different form. In fact, stock in the aggregate is fully paid up shares consolidated and divided into different parts in stock. Revenue profit available for dividend, profit available for transfer to capital redemption reserve. Capital profit not available for dividend, profit transfer to capital redemption reserve. Shares, the journal entries the shares for application money received, bank account debtor to share application, for allotment money due, share allotment account debtor to share capital, for allotment money due including premium, share allotment account debtor to share premium to share capital, for allotment money received, bank account debtor to share allotment, for first call money due, share first call account debtor to share capital, for first call money received, bank account debtor to share first call. When the shares forfeited, for the share forfeited journal entries, share capital account debtor to various call to application to allotment first call, second call to share forfeiture. Reissue journal entries, bank account debtor, share forfeited account debtor to share capital. Revenue profit journal entries, revenue profit transfer to CRR, profit and loss general reserve to CRR. Unit number 2. Redemption of preference shares. Redemption of preference shares. The redeemable preference shares are those the amount of which can be paid back to the holders of such shares. The paying back of capital is called redemption. Capital Redemption Reserve (CRR). Capital Redemption Reserve is a reserve created out of profit of the company. Preference shares are redeemed out of profit. The amount is so credited to equal to the nominal value of shares in Capital Redemption Reserve. The journal entries for redemption of preference shares. calculation of fresh issue, minimum fresh issue journal entries, redeemable preference share plus face value premium minus divisible profit in the balance sheet, divisible profit and loss, general reserve, share premium of fresh issue, problem, redemption of preferences. From the following information, find out how much minimum fresh issue necessary if redeemable preference share of rupees 2 lakhs is redeemed at 10% profit 30,000, general reserve 20,000, share premium 8,000, dividend equalization fund 50,000. Calculate redemption of preference share, fresh issue formula, redemption of preference share plus premium minus capital redemption reserve minus dividend, face value 2 lakhs plus premium 10% plus divisible profit, general reserve and P&L 30,000 plus 20,000 plus 50,000 share premium reserve fund minus dividend 8,000 is calculated. Total fresh issue 1,12,000. Third unit, final account. Two types. One is profit and loss account, another one is balance sheet. Profit and loss account. Point number 1, journal entries for profit and loss account. Revenue from operation, sales minus sales return. Point number 2, cost of goods sold, opening stock, purchase minus purchase return plus direct expenses minus closing stock. Point number 3, employee benefit, wages plus outstanding wages, salary plus outstanding salary. Point number 4, finance cost, interest and debenture plus interest and debenture. Point number 5, depreciation. Point number 6, other expenses. Statement of final account P&L, income, expenditure. Income 2 types, revenue from operation, other income. Expenditure, employee cost of goods sold, employee benefit, depreciation, finance cost, other expenses. Income minus expenditure equal to net profit. Profit and loss account. Final account of company. In the case of sole trading concern or partnership firm, the preparation of final account is not too compulsory, but the companies have a statutory obligation to prepare a final accounts required by section 209 and 210 of the Companies Act 1956, the Companies Act revised 2003. The Companies Act requires every company prepare trading, profit and loss and balance sheet. Unit number 4, valuation of goodwill. Goodwill means the present value of the firm, anticipated excess of earnings. Goodwill 4 types: average profit, super profit, capitalization of super profit and annuity method. Average profit equal to total profit divided by number of years. Goodwill, average profit into number of year purchase. Another one is super profit. Super profit equal to average profit minus normal profit. Normal profit equal to average capital employed into NRR. The super profit into number of year purchase, that is calculated goodwill. Third one is capitalization of super profit. Capitalization of super profit divided by NRR. NRR means normal rate of return. Fourth one is annuity method. Annuity method, super profit into annuity factor. Valuation of goodwill. Goodwill is the something to the firm future profit almost without effort. Goodwill is the reputation of the company to name the business invisible, and hence it's the intangible asset of goodwill. Methods of goodwill. simple profit method, super profit method, purchase of average profit, consolidation of average profit, weighted average profit, purchase of weighted average profit, purchase of super profit, sliding the valuation of super profit, annuity super profit, and the capitalization of super profit. Valuation of shares. Valuation of shares two types: net asset minus preference shares minus dividend minus liabilities divided by number of equity share. Yield method. Yield method equal to ERR divided by NRR into paid up per share. ERR equal to profit divided by paid up capital into 100. Calculation of profit. Profit calculated: profit minus tax minus reserve minus dividend, remaining balance for profit. Unit number 5, accounting standards. Meaning of accounting standard. According to Mr. T.P. Ghose, accounting standard are the bodies of documents issued by the recognized expert accountancy body to relating to various aspects of measurement, treatment, and disclosure of accounting and transaction and event, that is accounting standards. Accounting standard. IFRS defined standard of interpretation adopted by the International Accounting Standard Board IASB. The company's International Financial Reporting IFRS, International Accounting Standards IAS, International Interpretation developed by the IFRS, Interpretation Committee IFRIC, Formal Standing Interpretation Committee SIC. Accounting standards for IFRS. The IFRS Foundation is the legal entity under which the International Accounting Standard Board operates. The foundation is governed by board of 22 trustees. IFRS Foundation is the new name of the International Accounting Standard Committee approved by January 2010. Thank you.